The Bob Murphy Show, episode 153.
There's a tidal wave coming. What you gonna do?
Get ready for another episode of The Bob Murphy Show, the podcast promoting free markets, free minds, and grateful souls. It's your source for commentary and interviews conducted by a Christian and economist. Now here's your host, Bob Murphy.
Hey everyone, welcome to another episode of The Bob Murphy Show. Today's episode, I'm going to be talking with Mark Brennan. Let me read a little bit of his official bio. Mark G. Brennan is an adjunct associate professor of business ethics in the Business and Society program at Stern, where he teaches both undergraduate and graduate students. So incidentally, that's the Stern School of Business at NYU. Professor Brennan received his PhD in history from the University of Pennsylvania. His dissertation explored the activities of American Protestant missionaries in Cuba between 1898 and 1950. His research interests include U.S. diplomatic and economic history, 20th century global politics, and the history of classical economics. Prior to joining the Stern School, Professor Brennan worked as an equity analyst and portfolio manager covering the financial services industry for several asset management firms and hedge funds. And before his career as an investor, Professor Brennan was a CPA at Pricewaterhouse, working for a variety of banking and financial services clients. All right, so you guys may have heard me refer to the elusive Von Pepe, and he's the guy who recommended to me that I get Mark Brennan on for the show. I met Brennan. I think I was at grad school at the time. I was because Chaos Theory had just come out. And I gave him a copy, and so Brennan is certainly into libertarian politics, and he's just had a very interesting career working in the financial sector, hedge funds and such, and then deciding to get a PhD in history. And so we talk about that and his career change. He was in the thick of things during the housing bubble. We talk about that. And we also talk a lot about it because he's a professor of business ethics. Milton Friedman's famous dictum that all a corporation should do, shouldn't engage in making donations to curry favor with the public about what a good corporate citizen is. Nope, just maximize dividends for shareholders and then let them go donate money to whatever causes they want. And so we talk about that as well. One final caveat before we dive into the interview. Just want to warn you folks, there was a glitch with the recording. Long story, had to use a different software package when doing this interview, and the guest's audio was not saved. And so there are times my sound technicians did what they could, did their magic, but there's points in this where you're not going to be able to hear the guest because on my end, I was moving the mic around or doing something and my volume was too loud and drowned out the guest from the version that we had to rehabilitate. So anyway, sorry about that. Hopefully it won't happen again. So without further ado, here is my interview with Mark Brennan. Well, Mark, welcome to the Bob Murphy Show.
Thanks for inviting me, Bob.
So you have had an eclectic career so far. Just to sort of give the broad outlines of it, can you just explain, because you've been in different areas. I know the financial sector, getting a history PhD, teaching at NYU, and also being a trenchant critic of U.S. foreign policy and writing for conservative outlets. I know you also wrote for LouRockwell.com so can you just give us a quick version of, how did you get into all that stuff and what was the sequence of events?
Sure. I graduated from college in 1986 and went to work for Pricewaterhouse because I thought that would be a great career as an accountant. Did the CPA exam. And I remember the first red flag I got in public accounting was during training. We had a training class of like 80 people, and they brought us into a room, and every day they would kind of parade one of the partners in front of us who would talk about how great it was to be an accountant. And I remember one day a young partner came in and he said, "Folks, I got to tell you, you have picked the right career. The best benefit of being an accountant and working here at Pricewaterhouse is that you will get the cheapest life insurance in the market." And everyone in the room was just, started singing hosannas and saying, "I've reached the promised land." And I sat there, said to myself, I'm 22 years old. And I said, wait a minute, like the best benefit of this career option is cheap life insurance. I said, I'm in the wrong place. I don't want to be here. So that was.
Can I stop you? Was that because actuarially people doing accounting are so safe? Like,
yeah, I think they're
you're not going to get any STDs, right?
no STDs, they don't go skydiving on weekends.
Right.
They're working on weekends. I think it's just a really risk averse group.
Mm-hmm.
People who study accounting tend to be risk averse. And one of the principles of accounting, one of the main principles is the principle of conservatism.
Mm-hmm.
You're always kind of overstating expenses, understating revenues.
Right.
So it's that crowd. So, I looked around the room. I saw 80 people who could not have been happier. And I said, I want to make money. I want to have like a fun life.
Mm-hmm.
Cheap life insurance. I'm not even buying life insurance. I don't care what it costs.
Mm-hmm.
So that was my first red flag. So I did accounting for a couple of years and got very bored with it. And the whole time I was kind of intrigued by the stock market. I was working at Pricewaterhouse in the crash of 87. I saw that happen. It just made me that more excited to learn about the stock market. So I went back and got an MBA. Lucky for me, I was already a CPA when I went to business school. I went to business school at Cornell. And I actually chose that school for two reasons. Number one, at the time, everyone cared about the Business Week survey, and Cornell was ranked number 4 that year. Plummeted ever since then. Probably with me and it's an alumni base, it's not going to do much better. But more importantly, I was really excited about Cornell because as a CPA, they said you don't have to take any accounting courses, which I was very excited about, not to have anything to do with accounting ever again as long as I lived. So I was able, and this was just when the wall fell. So this is 1990. So I get to Cornell and I thought, what will be the language of Eastern Europe now that the wall has fallen? And everyone told me German. So I took German and fell in love with German while I was doing my MBA. And while I was doing that, I also figured I should.
Can I stop you? Because you thought you were going to be doing a lot of business with people, or you thought you were going to like physically go over there?
I thought both.
Okay.
Business opportunities, the wall fell. There's this part of the world that's got to become economically modernized.
Mm-hmm.
What skill sets would you need to go over there? I thought German would be the thing. That proved to be totally wrong, but I absolutely fell in love with German.
Mm-hmm.
I just enjoyed studying the literature and the language. And so I actually continued that after business school. But
I'm sorry to keep interrupting, but I wanted to make sure. Why was it wrong? Because there weren't that many opportunities, or because you didn't need to know German to do business over there?
Yeah, Russian would have paid off much better.
Okay.
Everybody speaks English. And
Mm-hmm.
there's the old joke, the only difference between Germany and the United States, they're very similar countries. The only difference is everybody in Germany speaks English. So if you can...
Can I tell you my thing? You know how they always, and this ties in, maybe we'll talk about foreign, but how they say like, it's a good thing that, the United States had FDR at the helm. Otherwise, you'd all be speaking German, like to the people in the U.S. And my thing is like, no, not even the Nazis could have gotten Americans to learn a second language. Give me a break.
Right.
But,
yeah. We are, if they're like the one kind of sine qua non of an American is being a monoglot, right?
Yeah.
Just do other languages. I love languages. It's my thing. So I'm probably not patriotic in that sense. But anyway, so I'm studying German. I'm thinking, this will be, if I want to go to Eastern Europe or go to Russia or whatever, German's the way to do it. And I had gotten that advice from a bunch of people. But while I was doing that, I also thought that I should kind of furnish my, work on my knowledge of European history. So I took a class with Walter Lefebvre, who is arguably the most important diplomatic historian of the 20th century in the United States, or let's say maybe post-war. And I say arguably, there are other great ones out there. He's super important. So I took a class with him, and it whet my appetite for history. So I left Cornell in 1992, went to work on Wall Street, loved it, was having the time of my life, was a long-term value investor for a bunch of asset management firms.
Mm-hmm.
So I would, buy a stock and then wait for it to go up over the course of 5 years. And I got very bored. I get bored easily.
Can I stop you for a second? So people hear that phrase a lot. So I know, but for the benefits, what does that mean? What's a value investor? And then is that opposed to like a technical investor? Is that what the dichotomy is, or?
Sure. So the big dichotomy, and it's religious.
Mm-hmm.
I can't even talk to the other religion. There's growth.
Mm-hmm.
There's value. I'm a value guy. What value does, the example I like to give is the example of snow shovels. If you go to the hardware store in January and snow shovels are $20 each, but you don't buy one, and that night it snows 2 feet, how much do you think snow shovels are going to be the next day? What's your guess? What's the hardware store going to charge you? They're $20.
Are we in a place where Cuomo is the governor? Because they're not going to go up at all.
No. Okay, no. In the real world, in a rational.
In Rothbard land?
Yeah, in Rothbard land.
They're going to go up a lot.
Go up a lot.
Yeah.
Right? So what a value investor does is he goes to the hardware store in August, and the hardware store has a bunch of shovels down in the basement that are taking up space and, causing a cost of carry for the hardware store owner. And he goes to the guy in August and he says, "Hey, you got any snow shovels?" And the guy says, "Yeah, they're in the basement collecting dust, driving me crazy. I'll give you all of them for $10." Right?
Mm-hmm.
That's what a value investor does. Value investor buys it for $10 in August, and then he waits for the snowstorm to come in January and sells them for $60.
Mm-hmm.
Now, you could buy them the day before the snowstorm for $20. Pray, get down on your knees and pray that it's going to snow that night and be able to sell them for $30 the next day. That's what a growth investor does.
Mm-hmm.
A value investor runs around trying to buy things when nobody wants them. So when everyone's selling, that's when a value investor is buying. And when everyone's buying, that's when a value investor is selling.
Mm-hmm.
So my number one value investment right now that's out there, and I'm building on my success with Detroit real estate. About 10 years ago, you could have bought a house in Detroit for $100. The city was just really giving it.
Right.
So I always tell my students, and I had one smart student who took me up on this. He said, "I don't have a summer internship. What should I do?" I said, "Well, I'm a value investor. Go buy houses in Detroit. Scrounge up as much money as you can. Buy a house for $100. What's your downside?" And he sat there for a second. He said, "My God, it's $100." I said, "Yeah, if there's an earthquake and Detroit, falls into Lake Michigan or whatever lake it's on, your downside is $100, right?" So,
you know how much interest he could have earned on that? That's a joke.
Basis points, right? Thanks to the accommodative monetary policy. So limiting the downside with a lot of upside. So the kid goes, he buys a bunch of houses in Detroit, and he says, so when does this take off? I said, it doesn't need to take off. If you sell somebody a house in Detroit now for $1,000, that is a steal. Buying a house for $1,000. So the kid sold all the houses each for $1,000, which is still giving them away. But he made 10 times his money
mm-hmm.
in 1 year. Like, that's what a value guy does.
Mm-hmm.
Right now, and I can contrast that with Ken Griffin, the head of Citadel, just bought a condo in New York, pre-COVID. I think he paid $238 million. So what's his downside? $238 million. How much is that going to go up? Is that apartment going to go to $1 billion? I doubt it. You'd probably doubt it too, right?
Mm-hmm.
In order for a growth guy to make money, that's got to go up. I don't see that going up. And I'd love to know what that thing would be trading at right now with COVID. Probably nothing near 238. So there's a downside. So my big value investment recommendation right now, you can buy an entire city block with like a skyscraper, apartment buildings, ground floor, retail space for $10,000 in Caracas, Venezuela. There's a lot of hair on that, and it might not work. But if it does work, you will be the landed gentry of South America, right? And even if things just start to turn around and your $10,000 goes to $1 million for a piece of real estate that before all the nonsense in Venezuela was trading for $30 million,
mm-hmm.
We're talking about a home run. It might never work, but what's your downside? $10,000.
It's like I used to work for Arthur Laffer, and one point, I forget what he was even talking about. He was pushing something, and one of his clients or something pushed back and said, "No, that's a terrible thing. It couldn't be any worse." And so he, of course, came back and said, "Right, that's the perfect time to buy when it can't go down anymore."
Right, exactly. And I love the story in the 2008 financial crash. Warren Buffett, every company was looking for his imprimatur. If he would buy securities in any company, it would have just kind of been the vote of confidence.
Mm-hmm.
And so Goldman Sachs was kind of down on its knees begging Buffett to buy Goldman Sachs stock. I think he bought preferred stock, but they had trouble reaching him because during the crash they were calling him. And do you know where Buffett was when they were calling him?
No.
It's so great.
The Mises Institute?
No, he was at Dairy Queen with his granddaughter. And he was just letting the blood flow. They'll come to me. And when they come to me, that's when I want to buy their stock. But when Goldman is not coming to you,
Right.
you don't want to buy it. When they're down on their knees begging you, that's when you say, okay, let me think about this. So he was at Dairy Queen with his granddaughter, and he said, I'll call them back on my time.
That's funny because people probably would have thought, oh, every business person was scrambling around and doing lines of cocaine to stay up for 72 hours. But no, he was just I'm fine. Yeah.
Smart guys. If you remember, everybody was in the fetal position. In 2008, in the fall of 2008, the spring of 2009, we were all laying there in the fetal position saying, Mommy, make it stop hurting. No, it's never going to come back. And Warren Buffett was saying, the longer these people lay in the fetal position and then just start puking out assets at pennies on the dollar, I'm getting more and more excited. It's what all paid off in spades. Look what the stock market's done since 2009. Okay, so I do want to come back and spend more time on those, but I interrupted you with the discourse on what you meant by value investor. So you said you got into value investing and just were given the brief just so people know the timeline of how you came to. I'm doing value investing, and again, I get bored easily, and so I would sit around doing my value investing, buy a stock, and wait for it to go up over the course of 5 years. And waiting for it to go up over the course of five years was really boring. I started teaching at Cornell, and I loved that, and I was getting increasingly bored. So I actually, at night, I went to NYU and got a master's degree in history, which I had always wanted to pursue. So I was doing that to keep myself busy, and then kind of the biggest turning point in my life.
Now, I know you and I had a lunch or something when my book Chaos Theory came out when I was in grad school still. Is this the same time period when you were at NYU, or am I getting mixed up?
Roughly, I was there. So I did it. I did kind of like I did it as a dilettante.
Okay.
One course per semester, and it took me 5 years.
Okay.
I was doing it purely for fun, purely as an end in and of itself. That I didn't care where it was going to go on my resume. I was just doing it to learn more about history.
Right.
But I really fell in love with it, and I really enjoyed it. And I was getting increasingly bored at work. And I worked about 5 blocks from the World Trade Center. And on 9/11, I had a ton of friends in the building from having grown up here, and buddies from high school and college. One of my best friends from college was on the 105th floor. I worked very closely with 2 companies that were at the top of the building. They both lost 2/3 of their employees. I just lost tons of friends. And I sat there and I said, that could have been me. I'm sitting at this desk. I'm as miserable as can be. It's time to change my life. So that's when I said, I'm going to go get a PhD in history because that will make me happy. I know I like teaching. I couldn't get enough of teaching. So I took the GREs, applied to a bunch of PhD programs as an kind of out of the mold student. I was 42 years old. And I was lucky enough to land a spot with Bruce Kuklick, Jonathan Steinberg, and Walter McDougall, who are all pretty important historians at the University of Pennsylvania, and went down there and did a PhD in diplomatic history, which is really on the outs. We don't study diplomatic history anymore because we're too busy studying grievance history and all these things. So diplomatic history is belittled as chaps with maps. That is an honor. Chaps with maps matters. It's what people read when they go to Barnes & Noble. They look for the books about chaps and maps. People care about geopolitics. People care about diplomacy. The only place they don't is in the academy. So I'm fighting a losing battle here. But luckily for me, I was able to then parlay my PhD at Penn into a teaching position, non-tenure track teaching position at NYU in the business school. And people tend to be a lot more sane in business schools than in arts and sciences or in the other schools. So I'm really happy to be at Stern, where the students are off the charts smart. My colleagues are smart. Everyone is sane. We don't, the liberal cancellation culture has not bit us the way it's bit other people. And most importantly, the school allows me to teach diplomatic history. I teach ethics. I teach writing. I teach consulting. I teach a smattering of courses, and the school is totally open to me teaching diplomatic history and economic history, which was my minor field in my PhD. So, and most importantly, there's huge demand from my students. So last semester, I did an independent study with 1 kid. 15 kids showed up for it. So I turned my economic history and diplomatic history course into an independent study with 1 kid into a course with 15 kids.
Hey, so you mean, like, just to understand, because one student was working with you and said, hey, I really want to focus on this particular niche area, and you said sure, and then what, his classmates heard about it and said, "Hey, that sounds interesting. Can I sit in?" That's what happened, or?
And I said, I had said to my current students, I said, "Hey, if anybody's interested, this is what I'm doing." And a lot of them said, "Wow, I wish I'd known about that sooner." My schedule said, but 15 of them said, "Okay." And even funnier, I flew down to Palm Beach for Christmas break last year, and I was reading Foreign Affairs magazine, and this gentleman on the plane said to me, "Why are you reading that?" And I always take that as a challenge. I said, "Oh God, here it comes. This is going to be somebody who's more concerned about, transgender friendships in revolutionary America or some historical topic that is the rage in the academy right now." And I said, I do it professionally. He said, "Really? I read it too." And so I knew I had a kindred spirit. And the guy was with his wife, and he said, "Where do you teach?" And I said, "At NYU." And he said, "Can I come to your class?" and I said, "Yeah, absolutely." And his wife said, No, he will come." I said, "I want him to come. Like, I'd love to have, somebody older who, because I make a lot of jokes and I make a lot of cultural references that are lost on my students. I now am at the point, this is terrifying, I make reference to Archie Bunker as one of the earlier deplorables. But the last 2 years, I've asked the class. I make an Archie Bunker reference. I get blank stares. Then I say, "Has anyone ever seen the show All in the Family?" Not a single hand goes up. And then I say, "Has anyone even heard of the show All in the Family?" Which was an important cultural touch point.
Right.
That thing, set a lot of our cultural, which we're dealing with today. No one in our class has even heard of the show.
May I just try to help you recalibrate? For a while, I got big laughs by doing a George Costanza impression, right? George is getting very angry, right? Just kill, because, I have a resemblance to the man. And I did that once. It was a Mises event for a high school thing, and I got up there and I did it thinking like, "Oh, I better not talk about praxeology too much. Let me just kind of be funny, fun Bobby, Friends reference." And I did that, and it was okay. And this guy comes up with his daughter afterward, and he goes, "Hi, Dr. Murphy, we really liked your thing. And I was telling my daughter that, yes, there was this show Seinfeld, and you did a very good impression." And she's like, "Oh, yeah, I'm sure it was great." Like, Seinfeld is, and you're talking about Archie Bunker? No.
Yeah, no, forget it. So I couldn't have been happier than to have this gentleman in my class because, these kids that I have in my diplomatic and economic history class are the ones who are genuinely curious. But to have somebody kind of vouch for the experience and somebody who, watched, this guy was old enough, to go through the Vietnam draft, to have somebody in the classroom who could kind of vouch for it, not Brian has these crazy memories that no one else,
Or if you want to talk about, remember those gas lines in the 70s?
And everyone's like,
"What? You used to put gasoline in cars? We just charged the battery. What are you talking about?"
Yeah.
So that's been a blast. And I love Stern. The kids are great. They're so smart. I also teach graduate students. I teach ethics to the graduate students. They're smart too. But I spend most of my time with undergrads who, NY used to be a commuter school. I'm sure you know the history. My father went there in the 1950s, got his MBA, and everyone was a commuter. And now it's this on fire, super smart place. So I love having an intelligent audience, and it's a 20-minute subway ride from my apartment.
That's great. Okay, so just before I forget, an anecdote on the difference between the Graduate School of the Arts and Sciences and is it the Stern School of Business? Is that the technical? Okay, at NYU, folks, that we're talking about. So when I was there, so I was getting my PhD in economics, and I was in the Graduate School of Arts and Sciences, and that was like the more theoretical one, as opposed to like, the real world. And it was hilarious, like the turf battles and the elitism, I guess. I don't know what you would call it, but of course, each camp thought their slant was better. And so we were at something, and it was like a conference. Like I know what it was. It was a conference on economics, but it was being hosted at NYU. And so like I was sitting around a table with some of my professors. So I wasn't in class with them. It was like we were at something. So like I felt free to be more like loose with them. And so it was our micro professor. And there were people in the crowd that were from the Stern School. And somehow he made a reference to, "Oh yeah, the people over there at the Stern School, they where they think it's important to look at like the Monday effect on stocks," or something like that. He was making fun of like that the Stern people would look at papers talking about little trends and how to, stock prices and what they. And so then I said, "Well, in fairness, probably they don't think it's a big deal or think it's very important to build a model of the economy that consists of one agent who lives forever, because that's what we were doing in our program, and I honestly thought, Mark, that he would be like, yeah, I guess, to each his own. And he goes deadpan, goes, well, they should.
Yeah.
In other words, like
people are blinded by their ideologies, right? And not open to discussion. But ultimately Stern is a business school.
Mm-hmm.
I am lucky in that we have this, I work in this really weird department. It's called Business and Society. And we kind of give the kids, a taste of the liberal arts is what we were teaching them in my department. So before we unleash these kids onto the business world, we give them some humane learning so that they can kind of at least an awareness of ethical issues, some history, some writing, and stuff like that. So I'm blessed to be where I am because there are no history jobs right now.
Well, I mean, is it worse in history than in other areas, or aren't you? I mean, because in general, there's always this thing of like, people have alleged there's a glut of PhDs, for the last 10 years, as far as I know.
It's here's the statistic on history that will knock your socks off. 2018 was the first year since they've been keeping statistics since like turn of the century, 1900, that bachelor's degrees awarded to history majors dipped below 2%. So fewer than 2% of kids are majoring in history.
Mm-hmm.
English and philosophy are even worse. So when we talk about a PhD glut, I know 38% of kids are majoring in economics, and there still is a PhD glut there, but there are jobs.
Mm-hmm.
You open up the back of the history journals, and there will be like 2 jobs listed. And by the way, not for guys who majored in chaps with maps. It's for the other stuff. And so kids aren't even taking history. They don't care about it. The departments are in a panic. Classics, philosophy, English, all the humanities are going down the toilet because all you hear 24/7 now is STEM, STEM, STEM. I like to remind my STEM colleagues, the STEM people will drive us into the dark ages, but we need the humanities people to tell them when they're doing so, right? So like in China right now, they're breeding monkeys with mental illness, which we don't really need to do that. And that's kind of driving us into a dark age. You need the humanities people to remind them that there is more to life than just kind of material change.
Mm-hmm. Okay, let me let's see here. Why don't we, before I keep going, I know you are familiar with the Austrian school and libertarian. You might not use the label directly, but how did you get that component of your worldview under your belt?
I read a lot of Rothbard,
mm-hmm.
When I was trying to figure out what I should think about the world. I stumbled upon Rothbard. I don't remember where. Probably there was a place called Laissez-Faire Books.
Yep.
There was a branch in New York, and there was a branch in San Francisco. So my big awakening in 1986, I just graduated from college. I was working at Price Waterhouse. I thought I was as smart as could be, and I saw an advertisement. It was probably a National Review or something for Charles Murray's book that had just come out called Losing Ground. So I stomped over to Laissez-Faire Books down in the Village, right by NYU, and I walked in, and there's this overweight guy with this scraggly beard. And I walked in and I said, hi, I saw your ad for Charles Murray's book, Losing Ground. I'd like to buy it. And I'm in a suit, and I thought I was important. I was 22 years old at a job at Price Waterhouse, and I was just it. And this guy looks at me, totally disheveled, had like food in his beard. And I'm kind of looking down my nose at him, and he says, you want to read Murray's book? And I said, yeah, I'm here to buy it. And I just wanted to buy my book and leave. And he said, how can you possibly read Murray's book if you hadn't? And he started rattling off the historiography of economics and public policy. And it was this moment, it was like this epiphany. And I said, oh my God, I don't know anything. And this guy just taught me that I know nothing, despite the fact that I have a college education.
Mm-hmm.
And it was an awakening. And I just started reading like a maniac. And I would go back to the bookstore, and I got Rothbard, and then, Rothbard makes a reference to a book, you buy that book. And I did that. I would love to find this guy, Bob, because if I hadn't met this guy, I could be like just your typical pulsing moron walking around thinking he knows everything. I owe my intellectual life to this guy for that moment where he just put me in my place, and
right.
I owe everything to this guy. I've actually tried to look it up. I've looked into the history of the store. I've looked into there. I got to find this guy.
And unfortunately, libertarian who's disheveled with a beard and who's willing to just tell people they're stupid. That doesn't narrow it down.
Right. I basically described all.
Yeah.
But I owe like my intellectual I literally owe my intellectual curiosity to that guy.
Huh, that's great. And what's funny is too, like, that's not the normal way of customer service. When someone comes in to buy a book, you don't start insulting the customer, and yet he did you a service there. Yeah.
Well, and by the way, it's laissez-faire books, RIP. So maybe the market did decide.
Right.
Maybe put enough people in their place. I was receptive to the message.
Mm-hmm.
I remember when they went out of business, I would go to San Francisco on business trips. I would go early to San Francisco and go to their store in San Francisco and come back with like an enormous bag. Back when you were allowed to carry things on a plane with being strip search, I would come back with this enormous bag full of books from laissez-faire books in San Francisco because the New York branch had closed. This is before mail order took off. So that kind of exposed me to Austrian economics. You read a book, you like it, you look in the bibliography, you read books out of there, and I don't consider myself able to discuss it or explain it, but it's, if you put a gun to my head and said, pick a school of economics, hands down, that's the one I go to.
Okay, great. With learning German, did you ever read any of the Austrian works in German, or was that too technical?
Way too technical.
Uh-huh.
I did read a lot of books in German. German is a hard language. And so I read novels and they take a lot. I can't imagine trying to read, Rupke in
mm-hmm. I always could like in German, it would just seem like it would just be one big word. Like in English, it would be a phrase, and they would just keep making it a bigger word.
And then a verb after. I'm looking for the verb the whole time. So yeah, it just wouldn't happen.
Okay, why don't we talk about I want to make sure we get this in the 2008 crash. So did you see, for example, like I was pretty bullish. I was working for an employer who was, and then I left. And then in the summer of 2007, when I was on my own and I was looking at things, like all of a sudden I was like, oh my gosh, like I hadn't been paying attention to interest rates. And, geez, if the Austrian business cycle theory is correct, we are in line for the biggest crash since the early 80s. And, and that ended up happening. So that was one area where I did think the Austrian thing gave an insight. And I'm wondering, did you, I think we were chatting a little bit about this beforehand. You had a sense something bad was coming, right?
Yeah, actually. So the part I left out of my long-winded, boring story was that I was an investor. I invested in banks. That was my specialty.
Okay.
So I would go and meet with managements. I'd been meeting with managements from 1992 when I started in that job, right through when I went to Penn in 2006. And I watched things get uglier and uglier and uglier as time went on, especially in on the credit side of it, what banks were lending and to whom. And I can remember the insanity, building up to 08. I can remember going to banks. I'll tell you, Washington Mutual might be the best one, which no longer exists. And they would tell me, we've got this new system. People can just come in off the street, no ID, no proof of income, no job, and we give them a mortgage. We've got these risk models that show that, that we can construct a portfolio of mortgages to people with no income, no job, no proof of anything. And it works. Yeah, and it worked, as long as the Fed was cutting rates and inflating a bubble, this housing bubble. And you would hear stories, people who just weren't qualified to buy houses were buying houses. And every bank I would go to, I would say, excuse me, but this is insane. And they literally would say, you don't get it. Like, you don't get it. You're stuck in the old ways. And I would sit there and say, yeah, I might be stuck in the old ways, but this is going to collapse. And I started losing my mind thinking, holy cow, this is, this force has been going on for a decade. It just keeps going. Maybe I am crazy. Mm-hmm. And I had the internet bubble, pop in 2000. But I held my ground and I said, this is complete insanity. This can't go on. It's just, you can't keep lending money to people with no jobs, no proof of income or anything else, and expect that they're going to pay you back. It's just not going to happen. And lo and behold, the party did end. But I watched it. There's a bunch of reasons for this. And one of the things that I harp on with my students is the short-term horizon that all corporate managements in the United States have. United States corporate managements, C-suite, they are the nightmare that Plato taught us about in the Republic. They don't think like monarchs, or Hans Hermann Hoppe, right? Mm-hmm. A monarch thinks, what am I going to hand off to my grandkids? And he cares about what he's going to hand off to his grandkids. And so he looks longer term. He doesn't think, what's this quarter going to be like? He thinks, what am I going to leave for my grandchildren? Let me take the long-term perspective. Let me invest. Let me care about, the environment. A corporate CEO is looking at this quarter's earnings. How can I maximize this quarter's earnings? At the longest, his horizon goes out till December 31st, which is when he gets his bonus. So as long as he maximizes each quarter's earnings, which is not treating this business entity like a long-term project, as long as he maximizes his quarterly earnings, that will sum up to 1 year of great earnings. But that was in the early 2000s. That was done by just making a lot of mortgages, by growing the balance sheet, making a lot of mortgages. Oh, if they go bad in 10 years, I won't be here. I'm going to make my bonus now because I only care about the short term because I'm a small D Democrat, appeasing the crowd of Wall Street analysts and investors for mutual funds. And it blew up in our face. And Plato taught us that was going to happen. Democracy devolves into what he called ochlocracy, which we know better as mobocracy. The ochlos was the mob in Greek. So, we didn't act like monarchs. Corporate America doesn't act like monarchs. And by the way, look at who does act like a monarch in the business world. Warren Buffett, right? He cares about what he's going to leave his grandkids. Jeff Bezos cares. Jeff Bezos lost money forever, and people thought, it's never going to work. Not only did it work, he's the richest man in the world. How about Elon Musk? Is Elon Musk looking at this quarter's earnings when he's talking about putting a man on Mars? No. And who's getting rich? They are. Who is kind of treading water, spinning, and watching their stocks go sideways? The rest of corporate America, who cares about this quarter above all else. So it's something that drives me batty. I'm trying to inculcate a sense of long-term stewardship in my students. I'm spitting into the wind, but we as a nation, this isn't just corporate America. Look at how our government is constructed, right? Your congressman has a 2-year time horizon. Your senator, they're going to fix it. Give somebody a long-term time horizon. Your senator gets 7 years. The deficit didn't accumulate over 2 years or 7 years. It accumulated over longer than that. It's going to take longer than that to fix it. But we have a structural problem where we can't because the horizons of our elected officials are too short.
Okay, there's a lot there. Let's focus for a second on the the liar loans and all that stuff. So putting aside, the ethics involved, it does seem, let me put it this way. When I was a young, budding free market economist guy reading Rothbard or whatever, if some socialist came along and said, capitalism, you can't have just the unfettered market when it comes to like mortgage lending, because then banks would just be falling over themselves to give loans to people who don't have a job.
Okay.
I would. Yep.
Let me stop you right there.
Yep.
Okay, Mr. Socialist, we have anything but a free market.
Mm-hmm.
Actually, it's your socialist policy that caused the biggest problem. Federal deposit insurance. So you and I trot down to the bank and stick our money in the bank, right?
Mm-hmm.
And how much do we care what they're lending it out to? Not one iota.
Right.
A socialist policy, which is federal deposit insurance. They could be lending that money to fur-bearing trout farms, right? That they're just going to blow up tomorrow and nobody cares. You're covered. You're safe. You could not care less. So this idea that there's an unfettered market where banks are lending, it's totally not fettered because you and I and every other American with money in the bank could not care less what the risk profile of the bank is because we're insured. The government it has through a socialist process come in and remove and created enormous moral hazard, taken all the responsibility for you and me to go in there and say, wait a minute, where's this money being lent, right? So right off the bat, you can tell the socialist to stick it in his ear because it's not an unfettered market. In fact, it's government interference that drove so much of this.
Okay, so that's good. So you're.
No, wait, I'm kind of like rabid, doctrinaire free market guy. I see
right.
For regulation. I also know where regulation actually causes more problems. So I want to get to the. I'm a common good guy. I want to improve the common good.
Right.
Sometimes we need regulation. Sometimes we don't.
Right.
But knee jerk is the free market guy is going to say it was caused by regulation, and the socialist guy is going to say it was caused by unfettered capitalism. The two of them need to wake up.
Right. So, and that's what I'm trying to do here is to narrow in on specifically. So, yes, you've identified one reason, like a normal check that would be there in a truly free market is that the people, right? You say right now, just make sure the listeners understood your point. The regular people who have checking account balances with banks, what you do when you pick a bank is you look and see like, oh, is there a monthly service fee, or do I get a free toaster, or do they give me, extra perks when I spend money using the debit card? You don't look at their portfolio to see where have they invested their funds. Is this a safe place? Because like you say, FDIC is there.
Absolutely. So by the way, so every American can put on his hair shirt and say, and take a bow and say, I caused the financial crisis because I didn't care. I just put my money in the banks. I fueled the fire. I just said, to hell with it. Lend it to whoever you want. I'll give you a great story. While this was imploding, when it was really exploding, the week that Lehman collapsed, the maximum amount of money that the government would cover in your bank account was $100,000. I was at Penn, taking classes in the PhD program that had nothing to do with anything important, right? And the world's imploding. My wife was working at Goldman Sachs, and she called me up and she said, listen, you need to go to a couple of banks in Philadelphia and open some more bank accounts because, we're going to get hosed because we have more than $100,000 in the bank. We need to spread this around a couple of banks to get more insurance. And I said, oh, I don't have time. I'm studying the French Revolution and, it's like typical PhD nonsense. But I woke up and I said, all right, I'll do it. As I was like getting in a cab to go do it, the government announced that they raised the cap to $200,000 and I didn't need to go do it. So I said, hey, who cares, right? Just leave money there because now we've got more insurance in the banks we're in. We're covered. That was the worst thing the government could have done, right? Yeah, sure. It might have prevented runs on banks, but that's exactly what fuels it. So now somebody who knows about banks, I would have looked around like which bank is least likely to collapse. Let me put my money there. The government took away all that incentive. So there you go, Mr. Smith, socialist. There's your unfettered free markets. Totally screwing things up.
Okay, so that's one element. Still, though, one would be surprised that banks are going to lend money to people who they know are lying on the application. So am I right? One thing that I thought, when I was ex post trying to figure out what the heck happened, is that a lot of the originators of the mortgages weren't sitting on them. They were selling them off to somebody else. So is that part of the story?
Yeah. Fannie Mae, right? They bundle them up into securities and sell them off. So now you're not even going to bear the risk of loss. Like, this is insane. Which, by the way, that's fine as long as the people who are bearing the risk of loss know enough about what they're buying, and they didn't care. So you've got banks who are making a lot of loans because they get a fee, right? And we got to boost up this quarter's earnings. So let's make as many loans as we can. And oh, look, fee income grows and our balance sheet temporarily grows. That all signals future higher earnings. Our stock goes up. I, as CEO, get more money. Now, let's not keep them on our balance sheet because deep in their little teeny hearts that these bank CEOs had, it's little teeny heartless hearts. They knew that they were writing garbage. So let's get it out of here. So they packaged it up into a bunch of securities and sold it to a guy running a fixed income mutual fund who his main goal was to, get the highest yield. He didn't care about risk because he needed the highest yield because that would determine his bonus for this year. So he's buying garbage, right? And then it explodes in everybody's face when people can't make their mortgage payments. And everybody goes, wait, what happened? Oh, it was the free market. It was in many respects, but it also was because of interference. And most importantly, because everyone was acting on incentives, which were, I want to maximize my bonus this year. So let me just keep this, furnace roaring.
Okay. So we're pushing it down. So, the reason the originating banks could get by with it is they weren't sitting on it too long. They're sending. So then you push back the explanation. Okay, well then where I'm going with this is it seemed to me like a big component of it was you got these ratings agencies giving, AAA rating to stuff that clearly should not have gotten such a rating.
Yeah, but who's their customer, right? The rating agency's customer. The rating agency's customer, he was Bread I Ate, Song I Sing, right? I work for Leon Cooperman. He used to say that all the time. The rating agencies get paid by the issuers of the bonds, not by the buyers of the bonds. So that's like me, opening a restaurant and I pay you to review it, right? Your review, if I'm paying your salary, you're going to write a review. I could be serving dog food and you're going to say, this is the greatest restaurant ever. You want an independent reviewer to go in. The rating agencies were completely corrupt. They were anything but independent. They rubber stamped whatever the banks wanted to put out, whatever bonds were being issued, and people bought them. And by the way, the guy running the mutual fund, he was a smart guy, right? He had a PhD in finance from MIT. He knew this was a game. But again, he wanted to produce the highest yield he could. Why? Because you and I and everybody listening to this podcast was out there saying, I want to invest in the highest yielding money market fund. Which one is it? Oh, it's that one run by that MIT PhD in finance. So I'll invest there. So it was this enormous circle, which keeps coming back to, I don't think we took enough blame, keeps coming back to American savers who were looking for the highest yield. So The rating agency was a complete scam. It's still broken. It's even worse than it was before. And anyone who buys a bond based on a rating agency rating deserves everything they get, which I hope is a big fat loss.
Now, in terms of, again, when I was in the fallout of this stuff, trying to figure it out, a lot of what I concluded, and I just want to see if you think this is at least part of the story, is that yes, it's a profit and loss system. And so the way, quote, pure capitalism is supposed to work is the claim is not that there won't be mistakes on the front end. It's just people who do stupid stuff get weeded out. So for example, one would have thought, okay, a bunch, Moody's, Standard & Poor, they give AAA to a bunch of these derivative things that blow up in everyone's faces, or mortgage-backed securities and whatnot. They at least went under, right? And so the answer is clearly no, they're still in business. And I think part of it is there are government regulations in place that say, hey, like as a bank, you need to have such and such, different tiers of capital or whatever. And so to satisfy your regulatory requirements in terms of the quality of your assets, you need to have a rating given by somebody. You can't just say, oh yeah, my brother-in-law says all this stuff is tier one. The government rules codify like who is an acceptable party to be able to give a rating to this stuff. So I think in other words, for a lot of these companies, I think their business is sort of built in that, they need to be issuing these things because of various regulations. Like you need S&P to sign off on the stuff you're holding to satisfy your reserve requirements.
Yeah, which is great, except S&P is completely corrupt.
No. I'm just trying to explain why is it that even after this colossal screw up, these things didn't all at least go out of business, and like some upstart ratings agency that was giving valid ratings captures the market. Why is it that that's what I'm trying to explain.
I'm not sure technically if there's a regulation they must be rated, but let me tell you that it's much easier to sell a bond with a AAA rating from S&P than without it.
Mm-hmm. Okay.
So whether there's a regulation or not, issuers have an incentive to go and pay for that rating,
right? To
buy the rating, right? Mm-hmm. It's like you as a restaurant, you have an incentive to go and pay good reviewers to put out good reviews on you.
Mm-hmm. Okay, so let me give you a chance. I want you to elaborate a bit. So it's like in the environmentalism arena, a lot of times the tree hugger will say corporations don't have the incentive for long term. They're just very short term. And the standard free market guy will come out and say, on the contrary, there's long term. Like if they project that oil is going to run out in 30 years, then that will give incentive to go find more oil, and the price will go up, and speculators and as opposed to like government, which has a very short horizon until the next election. So why are you saying that in the real world, for some reason right now, there does seem to be this culture of, why should CEOs care about just the next, in other words, don't the stockholders realize the best thing for let me put it this way, I know I'm rambling. Even if I'm going to sell my stock next year, as long as, quote, the market evaluates stocks correctly, they should look at the long-term prospects and they should determine what the stock price is. So why isn't there an affinity of interest? Why isn't everybody interested in doing what's best in the long run for the corporation as opposed to short-term thinking?
Because investors don't care about the long term. And I have a solution to make them care about the long term, or to encourage them to care about the long term. And you can call it regulation, or you can call it tax policy. How about we do this? Let's kind of penalize short-term thinking, mm-hmm. and reward long-term thinking. So we sort of do that with our capital gains tax rules, where if you hold the investment for like a year, you pay a lower capital gains rate. But 1 year doesn't really get anybody thinking long-term, it just leads to a lot of gains. Let's try this. How about a sliding scale where high-frequency traders, these guys who hold a stock for a nanosecond and sell it, they can pay a 99.9% tax rate on their gains. And if you hold your stock for more than 10 years, you pay zero tax on your gains. So a sliding scale from 1 nanosecond down to 10 years. And I picked 10 years arbitrarily. Maybe it needs to even be even longer. But once you're locked into I pay zero taxes over 10 years, you're going to start looking at that company and saying, wait a minute, how does this help us a decade from now when I'm going to sell this stock and I want to do it tax-free, right? I want to be able to that would suddenly get all investors thinking longer term. And that's what we need to do, because right now, corporate managements are answering to Wall Street analysts who are thinking about this quarter. And Wall Street analysts are answering to mutual fund managers who are demanding that they give them good insights on stock so that they can have a good number this year to have positive inflows into their mutual fund this year and make it grow. We need people to think decades, not years and quarters. Mm-hmm. So my solution to start with is to increase the holding period where you get rewarded by paying zero tax. That would never fly in the, Alexandria Ocasio-Cortez, if I mentioned that to her, her head would explode. Wait, somebody's going to buy a stock, make a profit, and not pay a tax? That's insane. But I wish she would just think about it for 2 minutes. She doesn't do a lot of thinking. I would just think about it for 2 minutes. Mm-hmm. Also make, the free market, high frequency trader types make their heads explode. But I see little benefit to the common good from their activity. They always say, liquidity. By the way, if I'm holding my stock for 10 years, I don't really care about liquidity. And, the function of the stock market is to finance growing corporations. Mm-hmm. It's turned into the casino of liquidity, supposed liquidity. If I'm selling my stock in 10 years and it's a 10 bagger, I buy it at 10 and in 10 years I sell it at 100. And you're going to tell me there's a liquidity problem, so I get out at 97. I'm still really happy with that $3 hit I take due to lessened liquidity.
Yeah. Okay, fair enough. Let's see what. Maybe we could transition then. I know I told you I want to talk about in the context of corporate ethics and responsibility. So probably the thing that a lot of my listeners will be familiar with is Milton Friedman's got and actually, was there just an anniversary or something? Because they did some update on it.
The anniversary. The New York Times did an entire insert on it and had commenting on it.
So for just the context, so Milton Friedman has this famous argument where he says, it's becoming chic for corporations to show their customers how they're being responsible and, X% of our profits we're donating to solve world hunger or whatever, the environment. And Friedman was saying, no, what the corporations have a responsibility to is to maximize value for the shareholders, period. And then, as citizens, if the shareholders want to donate to help world hunger or whatever, they can. And because their dividends are going to be as maximized under this corporate management philosophy, they'll have the most money as shareholders with which to go donate to these philanthropic causes. So how do you, I know you said you take that in your class and you talk about that a lot. So what's your spin on that?
Yeah, I do a whole class on this with graduates and undergraduates. And we contrast it with Edward Friedman's article where he argued for stakeholder, taking all the stakeholders into account. And it's interesting. So Friedman says, you got to worry about not just your customers, not just about making money, but worry about your suppliers, worry about the neighborhoods you operate in, worry about the government.
Just to avoid confusion, because you said Friedman, but which you're talking about the Edward?
Yeah. So this is a nightmare, right?
Right. The stakeholder guy says this stuff.
Yeah. Okay. In my class, I'm constantly asking kids, did you say Friedman or Friedman? It's bad coincidence. So the stakeholder guy argues, you should take into account all of your stakeholders. That's actually a really good recipe to make a lot of money. So if you're Milton Friedman, you would say, I should care about my customers and I should be a good corporate citizen because ultimately that's going to make me even more money, which proves Milton Friedman's point. So I actually don't see these things as kind of butting heads. Mm-hmm. I see them as, if you believe what Milton Friedman said, you should consider stakeholder theory as a way of making your profit focus even better. Mm-hmm. Like, if you're constantly screwing your customers, like we joked about laissez-faire books, and you said that's not a great business model. Mm-hmm. You didn't care all that much about it, one of his stakeholders, which was his customers. And you kind of brought up Milton Friedman's point, like maximize profits. And one of the ways to do that is to care about your stakeholders. This is not an either or. Mm-hmm. If you're caring about all your stakeholders, it might very well lead to higher level of profits. And by the way, don't fund the thing. It's the thing that kills me with corporate philanthropy, which is what brought this up originally with Friedman. If you go to the Metropolitan Opera or go to the New York City Ballet, I always open up the program and look in the back. And there's Morgan Stanley gave $1 million to the ballet, and Goldman Sachs gave $1 million to the ballet, and Pfizer giving $1 million to the ballet. Why do they do that? They don't do it to help the New York City Ballet. They do it so that other fancy people, when they go to the ballet, can open it up and go, oh, look, Goldman Sachs is making $1 million donation to the ballet. Think about how, if Goldman Sachs were serious about making the world a better place through their corporate philanthropy, think about all the struggling ballet companies across the United States who, don't even have enough money to turn on the lights, who are trying to, in Toledo, Ohio, are trying to get a little ballet show going. They could spread that around, right? And get a renaissance in ballet across the United States, or pick your cultural topic, right? And it would explode. But guess what? There wouldn't be any fancy pamphlet that, other muckety mucks would see and be all impressed by. So they're not going to do that. But if they were serious about corporate philanthropy and improving the common good, they would give it to charities that are starving, as opposed to ones, that are serving caviar at their benefits.
Okay, so
it's marketing.
Right.
This corporate philanthropy is just a form of marketing.
But I guess, though, so you're somewhat cynical, but if you were in the board meeting at the Goldman Sachs thing, like, you might be okay with it because you're saying, oh, yes, this is good for your business. You are arguably maximizing shareholder value with this particular expenditure.
I was assuming that you put me in a straitjacket and you said, all right, we're going to, here we are in the board of directors meeting. We're going to make some donations. You got voted down 20-1, Mr. Brennan. So now that we put a gun to your head and we're going to force you to pick a charity that's going to go to, I want mine going to what's going to most improve the common good. I'm still going to hold my vote saying this is not our job. Our job is to maximize profits by caring about all of our stakeholders. Corporate philanthropy nauseates me. I don't think corporations should be doing it. Dividend it out, let the shareholder decide himself, as opposed to, because, by the way, as you've seen, all corporate philanthropy just becomes horribly politicized. It becomes marketing, where they want their name in the back of the New York Philharmonic's brochure, not to a struggling, string quartet in Durham, North Carolina. It doesn't go there, where maybe that might be actually add more value.
And of course, presumably, like, giving malaria nets to some other third world country probably is, on some metric, more important than even the ballet company in Toledo.
Right. And by the way, so these guys on the board of trustees, this is also another pet peeve I have: telescopic philanthropy. Dickens talked about it in Bleak House, where Mrs. Jellyby, her kids were, all she cared about was the starving children of Africa. Her kids were running around tearing up London and creating holy hell because she wasn't paying attention to them, because she was so busy telescopically focused on the starving kids in Africa. Corporations love to send malaria nets to Africa. We could pretty much eradicate, and millions of kids are dying from malaria around the world. Don't hold me to that exact number. It's a lot of kids are dying from malaria around the world every year. But we do our telescopic philanthropy and send them mosquito nets. Think about what the reaction on any Fortune 500 corporate board might be if there were a malaria outbreak in Scarsdale and kids were just dropping dead. And you and I got together and said, let's send them some malaria nets and tell them to sleep in the malaria net. You know what would happen, Bob? Scarsdale's fire department, they would re-rig the machines to spray DDT, and the trucks would be going around Scarsdale spraying every single inch of the town with DDT until every living being was killed, because the children of Scarsdale were dying. So the whole concept of telescopic philanthropy nauseates me.
And just to make sure I'm catching your point, you're saying because DDT has been banned because of environmental concerns, and so that's why this is still an issue?
Yeah.
Around the world. Whereas if it were on our home territory, we wouldn't care about Rachel Carson. We would say, no, we're getting rid of these mosquitoes tomorrow.
We're getting rid of mosquitoes because our kids are dying.
Right. Okay.
When there's people's kids dying, like, oh, isn't that terrible? Let's send them mosquito nets.
Right. I got you. Mm-hmm.
But they keep dying and we don't care. But we virtue signal and feel good about ourselves for sending mosquito nets when we could eradicate the problem. Because again, if the problem were here, we would eradicate it in 15 minutes. It's just like, so in my ethics class, we talked a lot about the factories that are collapsing in, like, Rana Plaza in Bangladesh, and 1,000 women are killed. We had a fire, the Triangle Shirtwaist Fire in the early 1900s in New York. We have not had another corporate fire since then, because we just put in all these distinct rules and regulations where there's not going to be another fire that's going to take out. It was like 180 women died in the Triangle Shirtwaist Fire. But, when 1,000 women die in a plant collapse in Bangladesh, like, oh, well, whatever. It's because corporate managements here are happy to do what I call regulatory arbitrage. We've got high regulations here where it would cost too much to make fast fashion. So let's farm it out to Bangladesh where they don't have the same regulations, where when a building collapses, 1,000 people die, like, oh, whatever. It's the same as a mosquito net thing. As long as American workers aren't dying in the creation of fast fashion, that's okay. If they're dying in Bangladesh, that's okay too.
Mm-hmm. Right. It's not the same thing, but I also notice it's with like in the environmentalism and energy. Like I did a lot of stuff on the climate change debate, and it was very easy to like just recommend, oh, in Africa, in these places where they don't even have reliable power, they should just rely on wind and solar.
Right.
As we used fossil fuels to get to where we are in our standard of living, but these people, no, you can't do that. That's otherwise they'd be.
I love telling people, turn off your cell phone. Don't take the elevator. Like let's live our beliefs. If you really want. You're insisting that these other places do it. Practice what you preach. This is, my monthly column is kind of like turned into just pointing out hypocrisy, and that's kind of what that's kind of my writing angle now. I love pointing out hypocrisy that's out.
Mm-hmm. Are you talking about your Chronicles?
Yeah, in Chronicles, that's kind of what my column has been doing. I look for the monthly hypocrisy thing and just go crazy on it.
Yeah, I will link to the recently you were talking about knowing your real customer or getting the customer right, something like that. That was a good one.
Corporations, they know who their customer is.
Yeah.
You don't realize you're not the customer.
Right. Let me just, I do want to save time for the foreign policy stuff. But I do want to bring this up because it was great. So this is an excerpt from Mark's column about the customer. Are you a Facebook customer gladly logging on to share your pictures of your dog flopping in mud or to update your friends on your bunion surgery? Great. Mark Zuckerberg can now quantify and package your data for sale to Chewy.com, the American Podiatric Medical Association. And then I like this one. NASCAR didn't offend its customers when it recently banned Confederate flags at its races, which are attended by many cultural Southerners who treasure their history. Instead, NASCAR's real customers, its premier partners Coca-Cola, Geico, and Busch, all sighed in relief when the racing organization eliminated the possibility that anyone would ever associate their products with the riffraff who jam up the infield with their RVs and bedraggled tents. So,
right. No, they're like the NASCAR fan who you would think that's NASCAR's customer. Mm-hmm. Like I buy their memorabilia. I go to the races. I watch it on TV. I spend a lot of money in NASCAR. I'm a NASCAR fan. You're not actually NASCAR's customer. NASCAR could not care less about you. They told you will come to our meets. Look, you have this cultural, attraction to the stars and bars. You're not bringing that anymore because our real customer, which is our advertisers, they don't want their enlightened, clientele in the Northeast to be horrified that Coca-Cola sponsors an organization where people show up with Confederate flags. So you thought you were NASCAR's customer. You are not. Don't bring your flags anymore. If you do, you're not coming in because we are catering to our real customers. I also mentioned in that article during the looting, the head of the European painting department at the Metropolitan Museum of Art came out and said, and he showed some painting from like revolutionary France, and he said, "This is a great painting." This guy was this artist defended what was good about Western civilization. The president of the Met got down on his knees in a craven apology and apologized to the looters, for this horrible comment. I, as somebody who likes to go to the Met and look at their paintings, considered myself a customer of the Met. I have now come to learn that I'm not a customer of the Met. The looters are. The president of the Met was trying to keep the looters at bay because once they're done tearing down the statues and burning all the books, they will go in. Mark my word, this is coming. They're going to go into art museums and art that they don't like, that either is by an artist, that they deem politically incorrect, or that shows a subject matter that offends them. They are going to go into art museums, start slashing paintings, smashing paintings, lighting art museums on fire. That's next. So if you think that you go to an art museum, you pay your admission fee, you buy something in the gift shop, you're not the customer. You're just raw material that they package for advertisers and other groups.
Yeah, that insight, is the one I think I got it from John Goodman originally. I'm not sure, but so I have this book, The Primal Prescription, with Doug McGuff, where we're talking about the U.S. healthcare system, and that was something. Once you hear it, it's obvious, but to point out, you right now when you go into a hospital or a doctor's office, you are not the customer. You're the patient. The customer is either the government or the health insurance company.
Yeah. You are the raw material.
Right. You're like an annoyance. Like just get out of here. Yeah.
Totally. The one that really kills me is parole officers. Parole officers will often refer to the prisoner that they're in charge of as their client. Their job, you and I as taxpayers are the client. Their job is to protect us from somebody who might, be a recidivist and might do something violent. So their job is to keep tracks on the raw material, which is the prisoner who's been released. But they constantly refer to him as a client, and you and I are just the guy who foots the bill. That one drives me batty.
Mm-hmm. Yeah. Okay. With the brief time here, I don't want to keep you too long, but let's talk about your dissertation. And so this is American Protestantism related to Cuba. So why don't you succinctly state what your thesis was, and then how did you get into this area?
Yeah, so my thesis, so the reason I got into it is probably more interesting. I've always been amazed by this island off the coast of the United States. At its closest point, it's 90 miles away, but it's so different. The United States is English, Cuba is Spanish. The United States is Protestant, Cuba is Catholic. The United States has a diversified economy. Cuba has what's kind of called a monoculture. It's just sugar. The United States is a Republican democracy. Cuba was kind of this oligarchy with this Spanish monarch at its head. So you had three groups: the Spanish royalty, the Catholic Church, and then the Cuban oligarchy. So this really different place that was so close to the United States. And over the course of their histories, they evolved differently. But there was always this sense in the United States, and you actually see this in the early 19th century. There were even people writing saying that Cuba actually, it's not an island. It's actually the silt that flowed out of the Mississippi River kind of coagulated in the Caribbean Sea and became Cuba. And for that reason, it's actually part of the United States. And then you saw, I think it was John Adams, there's a famous quote. He says, just as an apple falls from the tree and rolls back to the stump, so too will Cuba come back to the United States where it rightfully belongs. So, every time we say that, because Americans have this feeling that everybody wants to be part of us, every time we would say it, or an American thinker would write it, Cubans would say, what are you talking about? Like, we're a separate country. We're not part of you. Leave us alone. They did not appreciate these imperial sentiments coming from the United States. So this went on and on for a long time. And the crack in the hull was kind of the War of 1898, where Cuba was basically right about to boot Spain, and the United States came in at the last second. And, the ball was on the 1 yard line, and the United States ran it over the goal line and said, we scored the touchdown. And Cuba was all excited and said, okay, fine, we're independent. And the United States said, oh, no. Now you're under our thumb. And one of the groups that had been pressing for this the longest was American Protestant missionaries. The missionaries had started kind of going out around the world in the second half of the 19th century. And Cuba was very fertile ground that they were never able to get into. And they especially wanted to get into Cuba because it was so close and because it was Catholic. And at the time, Protestants viewed Catholics in a really backward way. And one of the theories of Protestant missionaries was that the only way you become a developed country was to become a Protestant country. The only way that you could excel economically was to buy into the Reformation and Protestantism and do away with Catholicism, and then you will become a modernized country. So one of the main missions for American Protestant missionaries was to just get that process going in Cuba. And granted, it was a backward economy because it relied on one product. So they went down there with these grandiose plans and kicked off the missionary project. And it was a hoot to research. It was a lot of fun. I taught while I was down in Cuba doing my research at the University of Havana. And it was a great experience. And the Protestant missionaries actually had quite a bit of success. If you look at Cuba today, it's about 12 million people. It's about 1,500 practicing Jews. It's about 400,000 evangelical Christians. And the rest of the country is kind of culturally Catholic, but really non-practicing. So the one group that does exist down there is the Protestants, and put it into the infrastructure that the Protestants were able to build until Castro destroyed everything in '59.
Okay. So, I know in your dissertation, like a lot of it was the Protestants during the progressive era. And that's something, I mean, I don't know if you have any thoughts on that it's commonplace to me now. I've read Rothbard's essay on the progressive era, and I know more about that, but what I'm trying to say, there was more to the progressives back then than simply, I want to help, like the women who die in factory fires, and let's have some common sense regulation about building safety codes. There were eugenics and lots of imperialist tendencies. So can you speak to that? Is there something there besides that's just that they happen to go hand in hand, or is there something about the people who are on fire to go change the world for good? A lot of times they end up using methods that are not from God.
Yeah, so we need to distinguish. When you say progressive today, somebody thinks, all for abortion and open borders and all that stuff. That's small p progressivism, and this was the progressive era,
right?
Kind of started, last quarter of the 19th century, and that's uppercase P progressive. And what that was, I'll give you a 30-second kind of history of it. The United States was kind of an agricultural country. Immigration starts really picking up in the last half of the 19th century. We've got the war, trains happen. The United States starts to industrialize and become more of a business economy than agriculture. And people were flowing to cities, and people saw immigrants coming to cities and people from rural areas coming to cities. And this group arose, kind of the progressives, saying, hey, through government action, we can, smooth this process and make the world kind of a better place. So you had settlement houses for immigrants. You had Taylorism in business, which was timing people it was all about kind of making government more efficient. But the strain of progressivism that really drove Protestant missionaries was the social gospel, which was part of progressivism. But that was kind of where they said, we need to get out, spread the Christian word, because that will lead to a booming economy. So they were progressives, but they were a very specific part of progressives that dealt kind of with the social gospel, which is pure progressivism. But that was really their animating force.
Okay. Let me ask you this. The Protestant missionaries who went to Cuba, did they look at the Cubans as like their equal, children in the eyes of the Lord? Or was it like they were beneath us and we got to help these, Well,
so it was funny. So when they went down there, they pissed off everybody. They pissed off the locals. Just because everybody got there, they're like, who are these foreign people? They weren't really into Americans when they first arrived. They pissed off the Cuban regime because the Cuban regime saw them as competitors, because they weren't just bringing Protestantism. They were bringing the American system. They were bringing capitalism. And then they also really pissed off the U.S. government for quite a funny reason, for exactly what you asked. They went down there actually and said, hey, that part in our founding documents where it says all men are created equal? We actually buy into that and actually try and push that here in Cuba. At the same time, that all these horrible things were happening here in the United States. And I'm not one of these people who says that all of American history is horrible. But they went down and actually practiced what the founding documents were preaching. So they went down and were pushing for all men were created equal. And they started to get an open ear. And the U.S. government said, hey, what are you doing? Like, why do you keep saying that stuff? And they said they would hold up the Constitution and go, oh, we're just doing what it says in the Constitution and the Declaration of Independence. Like, why are you upset? And so they were kind of, pointing out the hypocrisy of the American government. But then it started to become...
Hey, Mark, just so I can understand, because the U.S. government was afraid these people are going to start making political demands if you put ideas in their head? Is that what they were...
Making political demands, and, people back home, Americans might see, I saw a lot of documents from the U.S. government saying, what if the average American sees, that these ideals can actually be put into action? We might have people start talking about, desegregation or, other preaching or documents. We need to have them stop pushing this stuff. They don't know what they're pushing. This could create a monster.
Right.
So the Cubans did that. The Protestant missionaries did that when they went down. But the most interesting group was the Methodist Church, in my view. And what they figured out very quickly was you can't go down and preach to people in English who don't speak English. It's going to go nowhere fast. So they actually they thought like monarchs, which I'm constantly preaching. They thought like monarchs, and they said, let's take the long-term view. We need to have a clergy that speaks Spanish, and we can't create that overnight. So let's start at the bottom. So they built orphanages, and they built schools, and they built hospitals under the theory that we will educate kids, Cuban kids, we'll give them Protestant educations, and we will basically create a group of Protestant Cuban ministers who can speak to the locals in their own language, and they will do the conversion. We will do the conversion that way. It's going to take a long time, but that's our best bet. I thought it was a brilliant way to do it. And again, it lasted. There are 400,000 evangelical Christians in Cuba today. So, build something that's going to last for the long term, it works a lot better than going down, and screaming, fire and brimstone sermons at these people in English and just have it bounce over your.
Mm-hmm. Okay, well that's great. The last thing I want to throw at you, if you have, do you got time for one more train of thought? Okay.
Next one.
All right, let's So you talked about, how your historical training, the diplomatic history. So I'm wondering, can you speak to, I guess, Don Rumsfeld versus Otto von Bismarck? Who's a better diplomat?
Oh,
what I'm getting at is, can you speak to U.S. foreign policy, and not in terms of like, oh wow, someone died, and therefore, but I mean just in terms of like old real politique. Is what's happening, like the neoconservative, what they've done, is it like, oh yeah, that makes sense, if you put aside morality, or is it like, no, what they're doing is absolutely insane? That's the kind of thing I'm trying to get at here.
Yeah, I couldn't be more dismayed by American foreign policy. One of our biggest problems is that we have no grand strategy.
Mm-hmm.
We have no plan for what we're trying to do. I contrast it with China's Belt and Road, right? There's a strategy, and it's working. And
can you explain what that is?
Sure. Belt and Road. China is basically building roads and belts and buying ports all around the world. Basically, if you draw an analogy to the United States right after the Civil War, 1865, 1875, we had this explosion of railroads and canals. Canals were a little bit earlier, but we did this enormous infrastructure build out and the economy exploded. China is basically doing that across the world. And one of the things they've done is, if you look at a map, we talk about 3 separate continents, Europe, Asia, and Africa. It's actually really just one gigantic landmass. Halford Mackinder said, whoever owns that region, that's kind of where the 3 of them meet, whoever owns that region owns the world. China is taking Mackinderism for real and building highways, trains. They're investing in ports. They've invested in Italian ports. Under the idea that they own the infrastructure. And for a lot of countries that need the help in building an infrastructure, this is a godsend for them. The United States at the same time we're worried about making sure that we're practicing diversity and inclusion. China is building this infrastructure. We don't have any grand strategy. What we do is we play whack-a-mole around the world. We try to export democracy. We wrote Iraq a 230-page constitution. If we're going to go and export democracy, why don't we just photocopy our own constitution and give them that, right? We wrote it. We had Noah Feldman write a 230-page constitution, which was idiotic, just a grab bag of goodies for everybody, every special interest group. But again, it's not necessarily our job to be the world's policeman. I get a lot of pushback on that. China's playing for the long term. We're just playing whack-a-mole. We are, Jim, the one smart thing Jimmy Carter said was the sum of the special interests is not necessarily the national interest. Our foreign policy is basically driven by special interests. If you look at American foreign policy, just pick 2 countries, Cuba and Israel. Our foreign policy for both of those countries is 3 standard deviations away from any other countries. We are bizarre outliers in regard to both of those countries. And I'll leave it up to your listeners to explain, to think about why that might be the case. But think about special interests and how those are driven, both of our relations with both of those countries, but special interests. So we don't have a grand strategy. We're not playing the long game like China is. We're doing ad hoc, Band-Aid, spreading democracy projects. And, for anybody who thinks nation building is a good idea, I will point you to the very first American experiment in nation building, which was a colossal disaster, and we're still living with the byproducts of it. Do you know what it was?
No.
Reconstruction.
Oh, okay.
Our first attempt at nation building. A complete utter disaster. We couldn't even do it on the continental United States, and we think we can do it 8,000 miles away. I mean, we have this missionary zeal. It's one of the things that drove me to research missionaries. We have this missionary zeal where we think that, we were, empowered by God to go and remake the world in some image. And so we project, but we could not even do it in our own country. The hubris that it takes to think that you can do it 8,000 miles away is beyond comprehension. But we're not going to, stop trying until we are literally bankrupt. We're almost there.
So I've heard, I think Jim Rogers endorsed this view that, there was the British Empire in the 19th century, the American Empire in the 20th, and that the 21st is going to be the Chinese century. Do you think that's correct?
So I'm a historian. I look backwards,
Right.
and I don't. And it's hard enough for us to figure out what happened. But I'm with Jim Rogers on this one. I don't make a lot of predictions, but I rant and rave about this in my classes. Yeah. And I also lectured at Tsinghua University in China through Cornell. And I told them that the last time I lectured to them was last spring, a year ago spring, before this COVID thing. And I said, I had a room full of graduate students from Tsinghua University. And I said, first of all, I would like to congratulate you. And they like, congratulate us for what? And I said, congratulations, you've won. Belton Road, it's going to be your world. Your grandchildren are going to be telling my grandchildren what to do. Game over. Congratulations. I said, take a bow, to applaud yourselves. The whole room, they applauded themselves. And then the funniest thing was a student, I said, any questions? And a student raised her hand. This was after my lecture. I said, any questions? And she said, yeah, I have a question. You're allowed to say that? And I said, absolutely. In this country, we're allowed to say that. So the sad thing is, I'm allowed to criticize our lack of a grand strategy and praise them. But the group that's going to be ruling the waves is going to be a group where criticism is not allowed. It's going to be a totalitarian empire that we're going to be staring into the face of, that your grandchildren are going to be answering to.
Well, that's a pleasant thought. I could, yeah.
Dismiss it, Bob. You could say, you know what, you're a historian. You know what you're talking about when it comes to the future. My response to that is no one does.
Oh, no, it's unfortunately, I think you're right. I mean, the only thing now that I debate with myself, is the timeline. Like, how long until it's, and obviously, you could make parallels with our culture today in the Roman Empire, and there's no lack of material there. Okay, well, I could keep you much longer, but why don't we stop there? So, folks, my guest has been Mark Brennan. For links to all the things we've been talking about, go to bobmurphyshow.com/153. Mark, fascinating stories. Thanks so much for joining us.
Love it. See you later, Bob.
Okay, great.
You've just experienced another episode of The Bob Murphy Show, the podcast promoting free markets, free minds, and grateful souls. For more information and to subscribe to this podcast, visit bobmurphyshow.com.